Let's focus on Blue Star. The numbers were rather strong for the company. Record revenue growth, healthy margin expansion as well. We have with us Mr. Advani, the Managing Director of Blue Star, who joins us on the show. Hi, Mr. Advani. Good morning, and thanks so much for joining in. And first of all, congratulations on a very, very good showing. I was just looking at your Q3 numbers and comparing it with some of the peers. You have grown in style. You've grown close to around 36%, which is much better. Even for the first 9 months, you've grown much better. This I'm talking about in the RAC segment. And you've been telling us that that target is to get to market share of around 15%. Could you tell us what is the updated number? By the looks of it, you've gained quite a lot of market share. And do you think you're closer to that 15% odd mark?
Great. Thank you so much for having me. Appreciate it. Let me just talk about the overall numbers, and then I'll come to the room AC business. So revenue grew 25% in the quarter, as you said, aided by our segment 2, which is both room air conditioners and commercial refrigeration, which grew at 35%. EBITDA was very positive. We got to 155 crores, which is about a 48-50% growth. And PBT, we were able to deliver 134 crores. Actually, this is the first time in the third quarter, which you know is usually a slow quarter for Blue Star, that we were able to cross a PAT of 100 crores. So I think we're headed in the right direction. Coming to the room air conditioner business that you talked about, you're right, we had a very strong quarter. Of course, revenue did grow 35%, so we have improved our market share slightly. I think about 13.75% is our estimate. I do want to say that the industry has done well. So, of course, we've done slightly better than the industry, but overall industry has been very strong. You know that it was a weak summer, and I'm very happy to say that we've come back strong after a very poor summer. So I think a lot of it is sort of pent-up demand that was not fulfilled in that period, which has come in Q3. Margins also, we are able to hold a slight drop from last year, 7.4% to 7.1%. But I think that we had anticipated because comparative conditions are, of course, quite extreme. But I think overall, a very well-delivered quarter for us. Thank you.
Okay. All right. Mr. Advani, I had a couple of questions on the margins then. The EMP business margins, that looked very, very good. Was there any one-off in that one? Point number one. And point number two, on the unitary products business, the growth was good, but operating leverage didn't really play out. Could you explain that to us?
Sure. So in segment 1, you saw profitability grow from 7.1% to 8.2%. I think that's what you're referring to. Revenue growth was also reasonably strong, about 18% to 1,182 crores. So that was not anything one-off. I think all our businesses in segment 1 have delivered, whether it's our projects business. We had a very strong quarter for commercial air conditioning. We're very happy with the progress we're making there on the product front. Of course, our international businesses are a little smaller right now and will take more time to deliver results maybe in FY 25-26. Our service business continues to be very stable. So I think all around, a lot of focus on cost management, and we did get operating leverage there. Segment 2, you have pointed out rightly that operating margins were at about 7.1%, slightly lower than same time last year. So on the positive side, we've had stable raw material costs. We've had stable foreign exchange. We've been working very hard to take out costs from our products and bring better priced and lower priced products to the market without affecting our margins. So I think that we could have done a little better, I agree. But I think what we're keen to do is to see that we were able to load all our channels appropriately for what we expect is going to be a very strong summer. And therefore, we did have to compromise a little bit on pricing. But I think looking forward, we continue to be positive on operating leverage and delivering a far better operating profit for all our segments.
Okay, so can you give us the blended margins? What would the blended margins be by the end of FY25?
So we've been indicating that we want to get close to 8.5% to 9% in segment 2. I think we should be able to deliver about 8.5%. Q4, as you know, tends to be a big quarter, both in volume as well as in profitability. And so far, the outlook for the industry is very, very strong. We're well poised, so I think we should be able to deliver that number.
No, so 8.5% you said in segment 2.
Yes.
I'm trying to understand overall. I mean, what would it be?
Overall, so yeah, we have a lot of moving parts over the next couple of months. we've been indicating that, we want to see EBITDA go across that 7% threshold and then start inching up 7.5%, 8%. So we're on that track. I'm a little unclear right now how we're going to end the year in aggregate basis, but we hope to cross that 7% if things go well.
Mr. Advani, hi, morning. Can you talk to us a little bit about what is the situation as far as competitive intensity is concerned in the RAC market? Because that picked up immensely over the last couple of years, right?
Yeah.
So how's that looking now?
So, we've been talking about it with you for several quarters now. There's a lot of production coming online because of the PLI. Of course, our plant was commissioned first out of all the PLI investments, so we got online early. But we've had a number of competitors who have commissioned plants over the last few months. We expect more to commission over the next few quarters. So certainly there's going to be competitive pressure increasing. Our focus, as you know, it's actually quite simple. We focus on product development. We're trying to take out costs so that we have products that are priced correctly. We've traditionally been a premium player. We've come down to affordable premium. This year, whatever results you're seeing are largely delivered by our affordable product range. So what we've been conveying over the last few years is that as we bring down price points, we will do so without foregoing our operating margins, and we're showing you that. So I think we're executing a fairly tight plan. We are commissioning phase 2 of Sri City by March 31. That will increase our own capacity substantially, as well as for exports. So we are very much on our CapEx roadmap that we have planned, R&D investment, digitalization investments that we've talked to you about. And we think that in spite of the competitive intensity, we should be able to deliver the growth and the profitability numbers. I think
Mr. Advani, no, I get that, but there'll be no pricing-led growth in that sense, right? For the next couple of years, I would imagine.
No, we're not seeing a lot of price leverage there. So it is all about cost and how efficiently all of us can deliver.
Okay, well, you have mentioned growth quite a few times with new capacities coming on stream. Give us a growth number. For FY25, what kind of a growth number should we look at? Very quickly, sir.
So 20% plus is what we've planned to deliver. Top line and hopefully bottom line better than that.
Okay, 20% plus. Got it. Thanks a lot for joining in. Appreciate your thoughts here. We'll take